Hey guys, what's up? In this episode, I'm going to discuss 3 essential rules when investing, when swing trading, when day trading, whatever you are doing, you need to use these rules. If you are confused, if you ever have gotten in a stock position and you're like, I don't know what I should be doing, I don't know where I should be selling, I don't know where I should be exiting, or your stock goes against you and you're like, should I be selling? I don't know, and you start freaking out, or the stock goes up and you're like, I don't know where I should be selling this. Anything like that can be solved with these 3 simple rules. So let's jump into it right now. All right, guys. So when you are looking at a stock or when you are looking to pick an investment, what you should be wanting to do is identify 3 key levels. These 3 key levels are where you're going to buy the stock, your entry point, where you're going to sell for a profit, which is your take profit level, and where you're going to sell for a loss, which is your stop loss level. If you don't have these 3 levels picked and set, then you will struggle when the stock does something you weren't expecting, and then you're going to freak out. And we're trying to save that freak out. We're trying to make trading as systematic as possible and remove all the emotion. In order to do that, you need to have these plans before you even get into a trade. So let's explain that a bit more. Let's say you're doing a triangle breakout pattern. What does that mean? That means that the highs are getting lower and let's say the lows are getting higher. So basically what happens is the stock price is squeezing into a triangle type shape. And so when we see that happening, we know that we have a breakout level. So let's say that it's squeezing into a triangle and it's starting to break above and it's starting to break out. I'm just trying to give you an example here. Your entry point will be where the stock breaks out at. So let's say I'm going to buy the stock at this level. Okay, boom. Now we have our first rule, or our first point is defining our entry level. So now we know where we are entering. Okay, next step. Where are we going to take profit? So again, on a symmetrical triangle breakout pattern, it's going to be your high or your previous high. So again, we know that our previous high is going to be our take profit level. So boom, we have rule number 2. Where will we exit for a profit? So we have our entry and we have our exit. Now, rule number 3 is where are we going to exit for a loss in case it goes against us. All right, so we're going to be exiting a bit higher or where the bottom trend line is on a symmetrical triangle. So basically, it's based on your strategy where you're going to exit, but a solid rule of thumb, it's a 3% stop loss that works well. Now, again, all stocks are different. Each stock has different volatility ratings. So again, the preferred stop loss can change on that. And again, if you want to learn more, the Impeccable Stock software actually breaks it down for you. But anyways, you want to define that stop loss level, right? Because if a stock starts to go against you, you want to know where you're getting out. So once you have those 3 levels, then you're actually set up for success. You're set up because you know what's going to happen, you know what you're planning to do, and that's the way to succeed in the stock market. Now, again, for those of you like, okay, Austin, I set a stop loss, but I always move it lower and lower and lower as the stock moves lower. All right, guys, so if you haven't learned already, the key to success in the stock market is number 1, having a good strategy, and number 2, picking the right stocks. All right, so let's break down number 1. You need to have a good strategy. You need to have a strategy that is not only proven to work and works with others, works with yourself, it fits your personality, but also one that defines the setup, one that defines where are you going to buy the stock at, where are you going to sell it at, where are you going to have your stop loss at. When you have all those levels set and you follow a strategy like that, this becomes very simple. And so again, let's say you're using a strategy like the trending band indicator setup, right? We have about an 82% success rate on that. And with that, you know exactly where you're buying in, you know where your stop loss is, and you know where your take profit level is. And so with that, we know what our odds for success are. Now, if we start moving our stop loss down and down and down as the stock starts to move lower, what happens is we're adding to our losses, which means we're making our losses bigger than they should be, and we're messing up the odds of us making money, right? These statistics on these strategies are based on backtests of people who actually follow the rules. If you don't follow the rules, you're leading to a very worse setup, a very lower success rate, and it's just not going to work out well for you. The key in trading and investing is simple. Keep your losses small. and let your winners run. And the way to do that is to have these 3 rules set in place. So where will you buy? Where will you take profit? And where will you set a stop loss? All right, guys, thank you so much for watching. If you want to get weekly swing trading content, please subscribe, and we'll make sure to get those YouTube videos and podcasts out to you every single week to help you have an advantage in the market. All right, guys, I will see you in the next episode.